Hello guys. So today I will explain you my 7 essential steps to have a disciplined and a profitable forex trading plan. In this plan, I will uh, show you what kind of plan that I follow on day-to-day basis, what extra things that you need to look after when you create a trading plan, and how to customize it for your own taste and for your own mindset. It is really important to have. It is, I think, the most important thing after the risk management is to have a good and solid trading plan, and what things you need to do and what things you need to avoid uh, in your trading plan, and what how to follow that exact plan to in order to get discipline and become a profitable in forex. So let's jump to what this plan consists of. This is my own plan. You can have some different rules, set of rules for yourself. So let's just go. uh, yeah, I already explained this overview of the trading plan and why it is the most important thing to have. So let's jump to the point number one. I've segregated this plan in 7 steps. So as I have already explained as in the first slide, but in those 7 steps there are other points that I will cover. So we'll go step by step. So let's jump to the first point: trade frequency and risk management. The most important thing, trade frequency. As a trader, so let me, yeah, the daily trade limit. This execute 1 to 2 trades per day to maintain selectivity and avoid overtrading. What do I mean by that? Because as we are humans, and human beings are mostly capable of taking 1 to 2 good emotional decisions a day. So if you are saying that, let's just say I have a account of $1,000 and I want to risk a let's say 1% of that account or 2% of that account. So if you are risking if you are if you are focusing upon that 1 to 2 trades, you're gonna have a fixed mindset. You have your focus and your energy is going to be concentrated. It becomes segregated at one place, and it will show you, the market will show you that one opportunity in when you trade, and it will give you that one setup that you will execute upon, and then you will move on to the next. This is very important. You are in the you are in a profession where you have so many professional traders, these elite traders, these banks, these institutional traders. They are, you are fighting against them, and if you are fighting against them, all you have to do is just take your share and just get out of the market, because you don't have that much of money to manipulate or trade. So 1 to 2 trades a day is the rule number one, and you have to stick to this. The moment you went to your third or fourth trade, you're gonna start making losses, and probably there are chances that many of us, we can spot that one profitable trade a day in a one session. We can spot that. But what happens is, whatever amount we win, then we talk to ourselves that, no, okay, I have already won $10 on this trade. Now let's jump to another trade and I'll make 10, $20. And because of this mindset, you go into those loop of over trading and losing the profits and more than what you have made. So next point is risk per trade. Set your maximum risk to 1 to 2%. For some people, you're okay to risk 3%, 4%, 5%. It's up to you. Taking risk is really a subjective part. But for me personally, I risk 1 to 2%. If you have funded account, I would say you risk lower than 1%, maybe 0.25%, 0.5%. And then you can evaluate that, okay, if I'm making profit, then I can shift to 1% or maybe 2% of risk. Third point would be walk away on a win. This is really important. I've already mentioned this in the first point, that After the winning trade, stop trading for the day. Just close your laptop, close your charts, do something, go follow your daily routine. Maybe you're doing job, maybe you're doing some business, maybe you are whatever profession that you are following in your life. But emotional decision making is really important, and trading is one of them. And if when your emotions are on the line, it's really tough for you to stay focused and handle those emotions. So executing 1 to 2 trades a day, 1 to 2% of risk a day, and walk away when you win. This is the first step of from amongst those 7 steps. So keep this in mind. Let's jump to the next topic: trading session focus. Uh, as most of the people know, and for some who don't know what forex is and how forex trade. Forex basically is a counter market, is where it is 24 hours running, and it works for 5 days. So what happens, it's over the I think it what the word phrase is OTC, over the clock, over the counter market. I forgot the phrase, but it's all over the counter market, where it moves in cycle. And there are major four sessions that we usually look after. One is Tokyo, another one is London. Then before Tokyo, we have, I think, Sydney, the Tokyo, London. We have NY session, and again we have Sydney session. So these are the four sessions we basically, the market moves in this cycle, in this the cycle of this four sessions. What session are you going to focus? I personally focus upon pre-London and London sessions only. You can have this, the time that I mentioned is in GMT. You probably, if you are trading from India, the London pre-London session usually starts from 10:30 to 11 a.m. in the morning, and then it goes to, like, till 8 p.m. in the evening. But I would not recommend for you to trade for such a long period of time. I would say suggest you to just come to the chart by 10:30, 11 max, and then you can trade it till 2 p.m. In during in Indian time. But what I'm saying is, if you have a plan of trading one session, just keep it for 2 to 3 hours. Just trade it for 2 to 3 hours and then just call it a day, because then move on to the next day. Because what happens is, here, if you move on to from New York session, from London session, or pre-London session, the volume, the kind of people that participate in one particular session, they are different. So currency pairs, gold and pound yen, these are basically traded by that particular set of people who knows that how this pair moves, and they will show. Trust me, they will show every day at the same time in the market. And if you are if you are going to the New York session from the mindset of London and pre-London, then probably there is the probability of you making dumb mistakes becomes higher, because you are taking the same setup that you have created for London, and you're going to carry that setup forward to the NY session. And NY session, price probably might have created fresh zones, like fresh support and resistance. The dynamics of market has changed, and the kind of people that usually trade during that session has changed. So all this stuff you have to look after, or you really need a experience of all this session. You need to at least watch all the session for 6 months at least, and then you can start thinking of trading that session. Me personally, I like pre-London and London session. The volume that trades during this session is very high. Plus, the kind of price action that I am comfortable with is really good during this session. So I prefer this session. Let's jump to the next point. Third point: market focus. Instruments. Focus on trading gold, that is ZAO USD, and pound yen, that is JPY. I would say you don't even need a two pair to be successful in the forex or be profitable in the forex. All you gotta need is one pair, one session, and one trade a day. This is the best thing that you can do to yourself. There is a saying that there's nothing harm that someone else do to you rather than you yourself. So you are the person who's causing you the most these emotional setbacks, your depressions, you're getting anxiety. It's all within yourself, and you're the one causing all these things happen to you. So if you have a fixed set of rules, I think you cannot control all this stuff, but you can minimize the effect in the beginning. You can minimize the impact of this thing over you. So following these two pairs, I have seen people, including myself, when I began my journey in, I think, 3 years back. I was trading. I was really scared of watching gold. I wouldn't touch gold unless and until it is required, or unless and until there is necessity that I will shift to gold. But my major pair was GBP AUD, that is Australian dollar and pound. But then I shifted. I refine I change my strategy. Then I get comfortable with gold. So mostly my almost 90 to 95% of trade, I usually execute on gold, and few 5-10% that I execute on pound yen. So yeah, instrument, very important. Don't trade if just because some of your friends, they are trading USD JPY, maybe they are trading Nasdaq, maybe they are trading USD ZAR. You don't know the characteristics of that pair. You don't know how that pair moves. You don't know who the people who participates in that particular pair. The Here I will give you one guide to choose your pair. At least have a data of 1 to 3 months. At least focus on one pair for 1 to 3 months, and then see how that pair moves. Because gold and pound yen, these are really volatile pairs. You have to get comfortable trading this pair. So for starters, you can watch USD JPY and all those pairs. But yeah, if you're comfortable with instrument, just focus on only one instrument, not even second you need. The fourth thing would be risk management rules. You need to have a fixed set of rules every time you come to the chart, and you have to follow that same rule. Basically, you don't have to be human if you are trading. You have to be a robot. And just give me 1 second. It's better be a robot, because what happens is, when you have fixed set of rules, and you have to and when you want, or not want, but I would say, if market expect you to do same thing over and over again, so it becomes robotic, it becomes robust. And what it does to you, that you are the one who's going to break your own rules, not the other person, and not your friend. You're the one who's going to break your own rules. And it is really important to follow your risk management plan, your rules, your risk, all these 7 steps that you are that we are discussing right now. Stop loss placement, this is my number one rule. Set a stop loss in the range of 12 to 20 pips to limit downside risk. Why 12 to 20? Because I've been seeing gold and pound yen for like 2 years now, and I'm comfortable with this kind of stop loss. Whenever the stop loss goes beyond, let's just say 25 pips, I get a little bit of anxious, and I get that agility moving on. That adrenaline gets moving up on in my mind, and I'm not comfortable with. And this is the one of the major reason I don't like NY session, because in NY session you have a stop loss of more than 25 pips, which is not comfortable for me. So, and in London you will get, and let's just say in London, there will be times where you will get a stop loss more than 25, 20, 30 pips maybe. But these are the times that there are major news that are happening in the market. Let's just say Fed had changed their interest rate. Recently, they have just cut the interest rate from 50 bps, and at that time there was huge volume in the market. Even 30-minute candle would be like around, not 13, but even 15-minute candle would be around more than 25 pips. And at that time, you have to adjust your mindset to that. That at that time, I'm okay, trading that risk, because I'm trading my session, and I know that there is some major impacts that are happening in the market, and you have to take this risk. But most of the time, In London session, you'll get 12 to 20 pip stop loss. All you have to do is just wait for the right kind of setup. And if you don't get it, don't enter the trade. Just call it a day and wait for perfect setup to form. Next, avoid news volatility. The major people, they're going to lose their money in the beginning is trading news. Go to the forex factory every day. So this is my trading routine, right? Whenever I come to the chart, I first open forex factory, or you have other sources. I don't remember the name, but I mostly look at forex factory. So on the forex factory you will see all the kind of news that are there, and today's there, it will show the prior news for that day. And if you are seeing some sort of news like unemployment claims, fed rate decisions, maybe Jerome Powell is talking about something, maybe you have a CPI, PPI, you have a NFP, the most important news, NFP, then GDP, and this all news I am only mentioning for US dollars, dollar, because we are talking about mostly about gold. So I'm mostly interested in gold. But whenever this news comes, and before that news come, the entire day market is gonna set up for that news. Market is gonna consolidate. It's not gonna give you a, and trust me, I have experienced this whenever there is a news in the market. Because I do a lot of back testing, I've seen during the back testing as well that market doesn't move the way you want it to move during when there is some major news is coming in the in US session, in the NY session. And at that time I feel it that okay, there is something wrong with the market. This will come with a little bit of experience. But yeah, you will find that at certain period of time you will find that anomalies in the market, that this is not the way it's supposed to be. And that is the time where you need to understand that major news is coming. So you better stay away from the market and don't try to get into that volatility, and never ever trade news unless you want to gamble. News trading is purely gambling. Don't do it. Oh yeah. Say third point, skip US bank holidays. So why I'm talking about US dollar is being traded almost a 59 to 60% in forex, and it's the most important and the major currency in the world right now. And if there is a US bank holiday, it means the people that usually trade in that particular instrument, they're not going to be there, and you're not the person who going to bring the liquidity or volatility in the market to gain that momentum or to gauge that price action to go into your favor. And even if you do that, the probability of you winning becomes lower. You always have to make sure that you the probability always stays in your side, rather than trading a 50-50 chance. So refrain yourself from trading on news. There are times that there will be a volatility before the news, maybe in London session. You can trade that, but I would say avoid trading news. Fifth point, over trading. The most amount of money that I have lost in these 3 years is because of over trading. If I had not over traded, man, I would have made so much amount of money. Trust me, I think this is the most important for me, at least. Daily trading cap, already discussed. Limit yourself strictly to 1 to 2 trades a day. uh, yeah, reinforcing quality over quantity. Quantity, in trading world, the quality is always going to be above quantity, because in the reality, if you are doing some businesses, if you're doing some job, more time you spend on that job or in your business, the probability of you gaining profits, moving forward, becomes higher. But in the trading it works reversely. So the reverse psychology works here, that the less you trade, the less you spend your time on the chart, the more profit that you're gonna generate, and more you're gonna compound your money day to day. The best traders in the world, you will, if you listen to their podcast, what they're saying, the less they trade, the better they become. And then you will understand that, okay, also, Imagine you taking 1 to 2 trades a day, only one trade a day, and at the end of the week, when you come to the Friday or Saturday, you will you will remember the 5 trades that you have taken the entire week. Even out of those 5 trades, let's say three you won and two you lost, you will remember those trades. You don't have to journal it, and because of you remember those trades, the same trade whenever they happen next week, you'll be ready. But imagine you are taking 5 trades a day or 10 trades a day. I'm pretty sure you're not going to remember a single trade out of it, because you have already exhausted your mind, you're already exhausted yourself, and you're going nowhere with this mindset. Walk away on a win. Whenever you win a trade, just walk away, just call it a day. It's just really important. Okay, this is, I think I missed the 6th point. This is the 6th point, the confirmation strategy. I usually prefer to stick to 30 minute and above, mostly 30 minute, because I think 30 minute is a good confirmation. It's a strong confirmation. Below 30 minute, 15 minute, I go very rarely on a 15-minute time frame. You will find, because here is the thing: when you go on a high time frame, the trade that I have discussed in my previous video, the higher time frame, they gives a more weightage over the lower time frame confirmation. But you also have to remember that the foundation of lower time frames, they contribute to the higher time frames, but the higher time frames you refer for the overall momentum of the market. So let's just say 4 hour and 1 hour, they're selling, they're saying that market should supposed to go down. And if higher time frame, so the lower time frame like 30 minute and 15 minute, they are creating support, then they are just in the retracement. And when they are in the retracement, the price will create a resistance and eventually move down to make that move on the higher time frame. So stick to higher time frame from 30 minute, 1 hour, 4 hour, and daily. These are the higher time frames. Stick to those. The confirmations that you're gonna get on the high time frames are going to be a quality confirmation, and we already discussed you have to focus upon quality versus quantity, because on the 15 minute you are going to see a various amount of supports that are being formed, various amount of resistance that are being formed, and you will get confused in those smaller time frames. Below 15 minute is not at all recommended. 5 minute, uh, don't trade 5 minute. Only time that I go on the 5 minute chart is when there is a major news, and you are trading after that news, let's say after 1 or 2 hours, and at that time even 5 minute candles become a 30 pips or 20 pips candle, then you really cannot jump on to 15 minute or 30 minute, because 30 minute candle would be around 60 70 pip. So but those are once in a blue moon scenarios, so you don't really have to worry about it. Just don't trade at that time. Yeah, I think, yeah. Post trade behavior. What happens when you take a loss? If you lose a trade, in my plan, I have set this rule that if I lose a trade, I'm still struggling with this. I'm not saying that I'm 100% following this rule, but at least I have kept in my mind that if I lose a trade, I'll wait for at least 1 hour candle to close, and because what happens is, when you take a loss, you have triggered a very strong emotions in your brain and your body. So when that happens, your body mechanism, your brain mechanism eventually starts revenging that, and then you fall into a cycle of revenge trade. And this has happened with me a lot of times, and it happens, I'm telling you, I guarantee you that it happens with everyone, every trader who is successful today. So don't get agitated because you take a loss. Don't get try to control yourself, that okay, if I take a loss, then I'll just close the chart and I'll come back after 30 minutes, or maybe I'll take a 15 minutes break. Follow these small habits, follow these small tweaks in your life, which will lead yourself to follow your plan. This is really important. just do certain kind of thing. Let's just say I take a loss today, and I'll go and take a walk, maybe for 15-20 minutes, and maybe because of that, what happens is you don't get you don't get caught into those moments where market is not moving the way you want. And then you will see the price action prints exactly the way you want, and then you will get the confidence that, okay, this 1 hour candle close, my analysis was right, I was right, I predicted a move right, it was not a perfect time to execute a trade. And then you came back to the chart, let's say you manage your risk, and the 1 hour closed in your favor, and after that the price started going down, and you executed another sell, and price going to your favor, and you close your day with a win. So this is how you have to just create a kind of a circle around you, so that you will just focus upon your plan and not get driven out of it. Second would be, after a win, yeah, after a win, walk away, do your you do your routines, follow your daily routines. Don't come back to the chart and try to make more profit. Trust me, you're gonna lose that profit that you have made on that one particular day, and you're gonna, trust me, you're gonna lose more than that, and then you're gonna fuck up your mindset. It's not good for you. So these are the 7 steps. Yeah, this is basically a thank you screen. And remember, plan your trades and trade your plan. The key lies between consistency, discipline, and risk management. These are the 3 virtues I think everyone needs to focus upon, at least in the beginning of their trading career, when they're making losses. How can I less lose in trading? Anyone who wants to start a trading as a career or as a hobby, you're gonna lose for sure. You're gonna lose for at least a 1 or 2 years. Trading is not a uh, profession of get rich immediately or get rich overnight. It's not that profession. And those who are selling you this mindset, just walk away from them, because it's not going to happen. Trading, you at least going to need a 3 to 5 years of immense amount of pressure, immense amount of depression. If you're not mentally strong, I have been through all this, and I think most of the traders, they go all through, they goes through this. You're gonna found yourself in a room, sitting with those sorrows, pain of losses, all this stuff. It's gonna haunt you every day. All you got to do is just to stick to the plan. All you have to do is just come back and show up next day and follow the plan and just walk away, because this is all in your hand. You cannot control what the way market moves. All you can control is your risk. All you can control is your trading plan. You can control yourself. It's all you versus you. It's not you versus market. Market is right 100%. Just keep this in your mind, fix this thing in your mind, so that you will never gonna scold market for the mistakes that you have taken, that you have made. And I would suggest that don't even scold yourself, because when you are trading a plan, and when you are following the plan, and even if you lose, which is a part of this process, this is a business, and making a losses is the part of doing business. Every business has upside and downside. So same with the trading. Consider this as a business, and if you lose, accept the loss and come back to the next day. Because when you do this, your compounding becomes stronger. You start compounding the money, and in the beginning phase of your 1 or 2 years, you're probably going to struggle with this. You're going to struggle a lot with this. And I also have struggled a lot following my plan. But following your plan is the only thing that you have got. Last few points that I would like to cover. You can add up your things into this your plan, and then you can create your own plan according to your mindset. Trading is no, I can teach you a profitable strategy, but trading is a profession where most of the things you will learn from trial and error. It's not a you fix this screw at this moment and it will fix the issue. No, it's not going to happen like that. It mostly based upon trial and errors. You will learn from your mistakes. So find a plan that is suitable for you, for your mindset, your routine. Have a fixed set of routine every day, and I'm not talking about only trading, but even outside of your trading, have some fixed rules for your own life, and then follow those rules that you follow in your external life. You will follow this your own rules in your trading life as well, in your trading profession as well, because you're training your mind, you're training your brain to act a certain way in that certain scenario, and then your brain and mind will start working with you instead of working against you. So tweak this plan. You can add various rules that, okay, if I or you can say that, okay, if price goes 15-20 pips into the profit, then I'm going to close partial, which I usually do. When price go 15-20 pips in the profit, then I close partial and I let the rest run. And someday I close the entire 20, 20, if I'm profit in 20 pips, I close that entire position, and then I don't let rest run. Another rule you can say that, okay, maybe on Monday and Friday, I'm gonna risk certain percentage of. I'm gonna have a certain percentage of risk, and on Tuesday, Wednesday, Thursday, I'm gonna have a different percentage of risk. And then maybe on another thing that you can add here is Tuesday, Wednesday, Thursday, maybe you can let your major positions run, and then you can build your confidence, so that, okay, I've been taking consistently profit of 15-20 pips. Now let me try, going further 30 pips on coming from this Tuesday, Wednesday, Thursday. And for Monday, Friday, you keep your risk minimal and your profit minimal, because at that time usually you have low volume, low liquidity in the market. So have this kind of rules in your life, in your trading plan. You can customize it. Okay, I think I'm done. I've covered most of the things. I'm done with this plan. Make sure you. I hope you gain some knowledge. You gain some sort of confidence in your trading journey with this. Keep sharing, keep subscribing, keep following my channel, and keep sharing this content with your friends who wants to be a trader, and to have that. I just created this channel, not just only because I want to gain viewers to come, and so that I can grow my viewers and my subscribers, and then I start earning from that. No, I created this channel because if I am preaching something to someone else, it means I'm committed to follow the same thing in my plan as well. If not, I'm not following that, then I'm not honest, I'm not genuine, I'm not authentic to my plan or my profession. So it is really important for me to keep on coming and seeing and just making myself sure that, okay, I also follow the same thing which what I'm preaching to you guys. So yeah, it's all about that. I'm not here to sell any course. I'm not here to, I don't want to, maybe in someday, but right now I don't want to do any such kind of things. I just want you guys to make progress, and hopefully I become a reason for that. The way my mentor Raja Banks has being my inspiration. And it's really important to have a mentor in your trading, because without him you're not going to go anywhere. So thank you guys, thank you so much. See you in the next video.